Welcome everyone to our live Q&A session. My name is Natalie and I am joined here today with Dmitry. Today we are going to be answering your self-directed IRA and solo 401k questions. If you have questions that weren't submitted at the time of registration, feel free to type them up in the Q&A chat area. We will get those questions answered today. But our next live Q&A is going to be on Monday, June 19th at the same time. It's at 11 a.m. Pacific Standard Time. So if there are questions that come up after today's session, feel free to register there, and I would encourage you to submit your question, and we will get that answered next time. But before we start answering questions, I'm going to give a brief introduction. Dmitry is the founder and the president of Sense Financial Services, LLC. We are a boutique financial firm that specializes in a self-directed retirement account with checkbook control. He started his career back in 2000 in financial planning and real estate investing. Today, he's a California real estate broker, real estate investor, and a private lender. He has taught thousands of investment and financial planning seminars, and he's mentored thousands of investors. So welcome, Dmitry, and thank you for taking the time to answer the questions today.
Sure, Natalie, thank you, and welcome, everyone. Actually, before we jump into a Q&A, I wanted to just address a couple of concerns that my clients had and reached out to me just recently over the last few days. So let me give you some examples. One client, he had some medical challenges, and he had his 401k checking account at his local bank linked with his business checking account. And basically over the period of a few years, he drained his 401k. He just transferred the balance or partial balance over into his business account. He never reported that. I think he did that over a period of 3 years. We just spoke and found that out. So this is the reason why we strongly encourage you to have the business checking account for your solo 401k or your checkbook IRA, not at your local bank. Make sure they're not connected. Make sure that you have your business checking account for your solo 401k or IRA LLC at our preferred bank, Solera. This way, then you will avoid things like that. So for this client, he's now going to have to go back over the last few years. He's going to have to issue a Form 1099. He's going to have to amend his tax return. So it's quite a bit of mess that he put himself into. Make sure avoid that. Another similar issue happened with another client. And this client had a 401k checking account also at the same bank with the personal checking account, and mistakenly deposited a personal check into the 401k account instead of using a mobile deposit. It was an unintentional error, but things like that can be avoided by not having your personal checking account or your business, for that matter, attached to your retirement account. You don't want that. You want to remove the slightest possibility of making an error like this. And thankfully, these are 401k clients. And with the 401k, you can correct a transaction, incorrect transaction. You can fix that. With IRA, unfortunately, there is no possibility of fix that, and that would have been prohibited transaction, would disqualify the entire IRA. So it's very important, again, to keep your 401k accounts completely separated from your personal or business accounts, and even remove the possibility of making an error like this. And then last example, another client who had an IRA LLC, and he actually took a large amount from his LLC checking account, and he did what he was thinking a ROT conversion. So he actually took the money from the LLC checking account and he moved it into a Roth 401k paid the taxes at a local brokerage or at a brokerage, and but his custodial account still reflects that amount. It was a significant amount, several $100,000, and hopefully that can be fixed with the custodian. But the possibility is the custodian will declare that amount to be taxable, because you're not supposed to touch the money in the LLC. Your IRA owns the LLC, and any rollovers needs to be done on the custodial level. You can't touch money of the LLC. You can't move it to either your personal account or your another retirement account. Everything needs to be done on the custodial level. So just another reminder that it's very important where you bank and how you bank. And again, we do recommend that you use our preferred bank Solera for that. Well, with that, let's jump into questions, Natalie.
Sounds good. Our first question is from Stacy. I inherited 2 IRAs from my mom and wanted to know what my options are with them. One account is a regular IRA and the other is a Roth IRA.
Well, Stacy, good question. You do have some options with that. You can convert inherited IRA into a self-directed IRA. That's possible. Because one is a traditional IRA, the other one is Roth. You will need 2 self-directed IRAs, but you certainly can convert an IRA to a self-directed one, or inherited IRA into a self-directed one. That's certainly possible. We've done that a number of times. You can do that as well. One caveat that you need to be aware of, generally you're required to take the distribution over the inherited IRA over a period of 10 years. So you gotta be careful on how you invest. You gotta keep that in mind, but certainly possible.
Okay, next question is from Drew. How long has Sense Financial been creating self-directed 401ks for clients?
We've been doing this since 2010, so about 13 years. Short question, short answer.
Sounds good. Okay, next question is from Courtney. She wants to understand more about using an LLC to invest in a self-directed Roth IRA.
I think, Courtney, you're asking about IRA LLC, or also that is known as a checkbook IRA. And the LLC component is added inside of the IRA, whether it's a traditional or a Roth, to give you the ability to have checkbook control over your IRA. Because normally, if it's a custodial account, you have to go to a custodian for each transaction. If it is there is an LLC component that allows you to have the checkbook control. So the IRA makes investment into the LLC. IRA buys 100% of the LLC units, and then you become manager of the LLC. As a manager, you will open a checking account, again, at Solera National Bank, who we use as a custodian. And you have the control over that checking account. You have the checkbook control. But we do have detailed explanation on that, Courtney. I will direct you to a recent webinar we did on a checkbook IRA. So I suggest you watch that, where you can learn all of the ins and outs, how IRA LLC works.
Our next question is from Joseph. If I flip a house under my solo 401k, are the profits subject to capital gains tax?
Good question, Courtney. Before I jump into this, folks, I want to encourage you to type your questions. We only had a few questions pre-submitted today, so I think we have maybe 1 or 2 more left, but still have the time to answer your questions. So if you can think of anything, please type your question in the Q&A. And Natalie will read that, and I'll get to that for you. But Joseph, back to your question about flipping a house. When you make investment inside of your self-directed 401k, which is tax deferred entity, so there is no capital gains inside of a 401k. So the gains are sheltered from taxes. But what you need to be aware of, Joseph, and I've written about that extensively in one of the articles that I can point you to. You can email me and I'll send you the link on that. But all of the passive investments in the 401k sheltered from taxes, or gains on the passive investments, or income on the passive investments are sheltered from taxes. However, when a tax deferred entity such as an IRA or 401k engages in a business activity, and flipping a property may be considered a business activity, so then the gains or profits from such business activity will be subject to what's known as a UBIT, or unrelated business income tax. So it's a tax that is assessed on the tax exempt entities that are not subject to taxation otherwise, but when they engage in a business activity, that tax will apply. So again, if you're doing like a flip over a couple of year period, if you buy a property, you fix that up, you rent it out for a couple of years and then sell it. So it's not technically a flip. That will be a passive investment that you rent out and then you sell for a profit. You will avoid any kind of taxation. However, if you start flipping properties in your 401k, number one, you can't do any work yourself personally. Everything has to be outsourced. You can control it, but you're not allowed to do any work yourself. So you can be hands-on. And number two, if you flip several properties inside of your 401k, it certainly looks like you now running a flipping business in your 401k. Doing one property is debatable. And if you just do a single property, you'll probably be okay with that, especially if you're doing other passive investments. And if your intention maybe was not to flip it, but you happen to, the circumstances just worked out and you decided to sell it, you'll probably be okay. But if you start doing multiple properties on the repeated basis, it certainly looks like a business, and that will subject to you to unrelated business income tax. This tax, again, is assessed on the tax exempt entities that are not subject to taxation otherwise. And it is on the sliding scale, so based on the numbers, but it tops at, I believe, 37%. So it's not a small tax. And generally speaking, in my opinion, it's not worth to do any active business ventures in your 401k. You want to do passive investments only, because otherwise you're subject to double taxation, UBIT now, and then later on when you take distribution, you have to pay ordinary income tax.
Okay, our last one that was submitted is from Gabriella. She wants a review of how to document all contributions using the Sense Financial forms.
Gabriella, I can give you just a general overview here. However, we do have an article in the knowledge base on how to handle the contribution. So again, we have detailed description and guidance on how to do that. What you want to do is you want to get into the client portal, go to the knowledge base and just look for or type keyword contributions, or just go to the contribution sections, because we got several articles there on this topic. But all the contributions forms are available on the client portal. You want to go to the maintenance section and then click on miscellaneous forms, and then go to the contribution form. So basically there are two types of contributions with the solo 401k. There is a employee elective deferrals that you make as a employee of your business, and then there's a profit sharing contributions. That's the contributions that your business contributes into your 401k on your behalf, and that is recorded separately. So those two forms, again, we spell everything out on the client portal. Use that guidance, and that should be pretty straightforward. Also, to remind you that those contributions are for your records. They are not submitted to the IRS, so you keep them in your records. So you can always go back to them and recreate what happened in your plan. But pretty straightforward. Feel free to reach out if you need further clarification or guidance on that.
Okay, well, those were all of the questions, which brings our session to an end. We are glad that all of you were able to join us today. Once again, our next live Q&A is going to be on June 19th. It's also Monday. It's at 11 a.m. Pacific Standard Time. So please don't hesitate to ask any questions and to register. So we look forward to that and hope you all have a wonderful day.
Thank you for joining us today. Have a great rest of the day.